Good morning, everybody. Thank you. Welcome to our panel session on international freight matching. I wanted to just spend a couple of minutes and let each of the panelists interview, just sort of give you a quick introduction of who they are. I'll start with Graham. With Queen's English vernacular, we say Graham. Here you would say Graham. And short story, I spent years looking for graham crackers in the store, only to realise that it's not spelt G-R-A-M, it's actually spelt G-R-A-H-A-M. So this is Graham, or as you would say, Graham.
Thanks, Dean. So my name is Graham Park, and I'm co-founder and CEO at Kontainers, and we're an ocean freight technology company. We deliver front-facing execution platforms for freight forwarders and shipping brands. So effectively what we see on the ocean freight technology side is that a lot of the software dollars has been spent on back office solutions. So we look to deliver client-facing solutions. So effectively, we deliver your own branded solution for you to have a digital-first interaction with your ocean freight customers. So from online pricing to booking to managing shipments on a series of dashboards. We've got a couple of products in the market. Our flagship One Enterprise is used by 5 of the top 20 folks like Maersk and Toll on the forwarding side. And we launched another product last year called Edge, which is for medium-sized shipping brands. We're having a lot of success with that. About 2/3 of our customers are here in the US.
Martin?
Martin Liu, CEO and founder of Commtrex. We are the largest online marketplace for rail shippers to be able to connect with railroads, lessors, storage providers, translators, and several other service providers. I was a former commodities trader for JP Morgan, and one of the hardest pieces of the commodities trading sort of move for the product that I was trading was always the rail piece, because of the lack of transparency into supply demand, into fundamentals, into connectivity as to who to talk to when you're getting rates from a railroad or rates from a lessor. So the concept that was created was to create one centralized platform for rail shippers to be able to live in if they want to manage anything on their fleet, whether it be moving cars into transloading or moving cars into storage. They have one platform they can do it all from. So on the front end, we connect them, give them all the information they need in order to make a more informed decision. And on the back end, we collect data analytics on the trends that are happening across the rail industry in North America. We've also created the first exchange-based index, pricing index, for leasing rates and for storage rates. So now we're giving transparency and visibility to shippers so they can better understand when they are leasing cars or when they need to store cars, exactly what that rate should be. There hasn't been a benchmark before, and so we've created that first benchmark. And the overall goal is really to create a corpus of knowledge for the next generation of rail shippers to be able to have whenever they're rail shipping, to make it much easier for them to be able to identify and then find where they need to sort of move their cars.
Thanks, Martin. Matt?
Yeah, Matthew Tillman, founder and CEO of a company called Haven. We sell artificial intelligence-based software to large BCOs, so some would call them shippers, people who ship goods, usually large commodity trading firms, so that they can bring logistics in-house without increasing headcount costs. So that's what we do.
Excellent. So we've got an interesting panel for you today. We've got something in the rail industry, the shipping industry, and sort of the software side of the connectivity behind all of the different modes. So we wanted to talk a little bit about today about multimodal freight matching and talk about some of the issues. So Graham, I'll start with you. What are some of the biggest issues you see in your sector right now, and what would you be doing to address that?
I think, Dean, one of the biggest things we see is ocean freight, which is our primary mode today. I think, speed to market is super important. We're living in a world where software is, moving so quickly. It's really, obvious to me walking around the stands yesterday, trucking is quite far advanced. I think ocean freight has a lot of work to do to catch up. And I think, Amazon have come into the trucking scene. It's only a matter of time before they come onto the ocean freight scene. So I think speed to market. And, for us, with our product range, what we're doing is we're giving freight forwarders and shipping brands the ability to have a digital capability as a SaaS product. And I think, what we need to see is a lot more SaaS products that are easily available to shipping brands and freight forwarders as they go through their transformation and digitization process. So I think, it's all about speed. I think the start of this year, we've seen a significant increase in the pace over last year. And I think, as an enterprise SaaS company, we'd love to see a lot more companies on the ocean freight side make it easier for freight brands to digitize.
Right. But isn't there some resistance to that? Because as we look at maritime shipping in particular, it's almost like people are deliberately trying to be obscure. and not create this transparency. Is that what you see?
Yeah, you know, I think traditionally it's been quite non-transparent,
Right.
and you know, I think there's lots of reasons for that. You know, one of them is it can be quite complex. You know, you can have a container shipment start in a factory in Lianyungang in North China and finish in a warehouse in Salt Lake City. You know, and during that process, you've got, you know, a number of different parties. You've got truckers in China, truckers here, customs authorities. You know, you could have a rail, a barge, a ship, and trying to tie all of that together is quite difficult. So I think the transparency side of it is becoming, like, all of the market makers are all in on tech. You know, the world's biggest shipping line, Maersk, have talked about transforming into a technology company. The world's biggest ocean forwarder, Kuehne+Nagel, have launched, I don't know, maybe 10 digital products in the last year. So I think the market makers are all in, and I think it's only a matter of time now. We've kind of got close, if not, you know, gone past that point of no return. And I think that transparency is now being demanded by shippers. You know, at the end of the day, it's the BCOs that sit in their office and they run their business on a suite of modern SaaS tools, you know, Salesforce, you know, Office 365, Dropbox, and they're demanding these tools to get transparency on their freight, particularly the ocean freight side.
Very interesting. Martin, how about in the rail industry? What are you seeing?
There are two primary sort of issues that are taking place today that are going to have dramatic change on how the rail industry operates. Number one is the generational shift in the workforce. There are about 10,000 baby boomers that are retiring every day. By 2025, 75% of the workforce will be millennials. And traditionally, rail has been a very closed environment, meaning the relationship-driven sort of commercial aspect of it, the operational aspect of it, has really been driven by sort of knowledge that has been within people, individuals. And now that you're having this huge shift in change from baby boomers retiring to millennials coming into these seats, and with the amount of time that they have to not only learn what they're doing, but also the amount of time that they're going to stay in their seats is going to be much shorter in duration. I hypothesize that you'll never see a 15 to 20 year fleet manager ever again. And with that said, you're going to need to have a corpus of knowledge. You're going to need to have one platform where all these new generational sort of fleet managers, railroaders, lessors, everyone within the ecosystem is going to have one place they can go to be able to connect and then make decisions. So that's one major change, is the actual generational shift. And the other change is the way the railroads are operating. As I'm sure most of you know, precision scheduled railroading is something that is moving across all the different Class 1 lines. You have 3 major Class 1 lines have already stated that they will be moving to PSR. And what that's going to do is change the way they operate their network. So they're moving more of the resources to the shippers, such as having to get their own rail cars, such as having to store their cars. So what they're going to do is they're going to be able to force the shippers to now sort of control these resources. And now you have this generational shift where you have a lot of new shippers that don't know how to do this. So what we're trying to do is create a marketplace that allows them to be able to quickly identify exactly the sources they need to be able to move on rail. So you take those two factors together, I think the rail industry in general, not only on the railroad side, but across the rail services, such as transloading, are going to change fundamentally within the next 2 to 5 years.
So, Martin, one of the challenges is, unlike trucking, where you've got telematics devices pushing off a latitude, longitude every second in some cases, or every 15 minutes, there doesn't seem to be the same level of visibility into the rail car and intermodal space. So what's being addressed? How is that going to change?
Well, so one of the major initiatives that all the Class 1 railroads are trying to do, and you hear this in earnings calls all the time with the CEOs, is they're trying to make rail shipping easier. Rail typically has not been a very easy product or mode of transportation to move product on. So what they'd like to do is try to create more visibility into the actual movement and the actual sort of management of the fleet. So I think positive train control is going to allow for a lot more dynamic sort of tracking and tracing of actual movements of cars. And then platforms such as ours, and there are other platforms that are out there that are trying to allow for more transparency into the data analytics of the movement, so shippers can better optimize not only the products they're moving, but also the routes and then how often they use it. So having that transparency to not only into visibility into where their cars are moving, but how their cars are moving, how do you optimize that, and then also how they can sort of take their existing network and be able to optimize it sort of not only in conjunction with rail, but also with trucking. So I think intermodal and then transloading is being a much bigger part of rail than it typically has because of the way that railroads are moving to PSR.
Got it. Okay. Matt? some big issues? What do you see in the software side?
Yeah, so I mean, I can really comment primarily on the shipper side because we don't sell software to freight forwarders or intermediaries. If you look at this industry, ocean freight at least, 65% of ocean freight is sold by intermediaries. And if you're looking at a number that large, you kind of have to look at what the intermediaries provide. And intermediaries are effectively trading firms because they arbitrage freight and contracts that they have with different carriers. Different service providers such as warehouses. And when you're a trader, volatility gives you your spread. Right. So transparency is a good thing for BCOs, and it's a critical thing for BCOs, and it's legitimately terrible for almost everyone else in the supply chain because they're brokers that trade on volatility. And I think the thing that we're seeing happen is by companies like Amazon or companies that have that sufficient size coming into the marketplace and saying, well, I don't need to make money off of freight rates. Right. So here are all of our freight rates transparently, click and book. It's causing a lot of fear in a marketplace who is traditionally traded on other people's fear. Right. And I think that's really fascinating to see because shippers at the end of the day want a consumer-like buying experience. Right, a great customer experience end to end, and a lot of transparency because they manage their insurance contracts with that transparency and trade finance contracts with that transparency. And I think that's what's really driving the need for transparency in the rate market, but also in the contracting market as well.
Right. So how do you overcome that fear? Because we see it with our sonar product. We create this level of transparency. Some players that have made their margins on lack of transparency are quite resistant. Do you get to a tipping point, though, do you think, where people start to say, yes, we have to now be transparent?
I do, and I think a lot of the freight forwarder management teams have started to realize that they're effectively consulting firms that hold assets on the balance sheet, and you've started to see them try to divest those assets off the balance sheet, with Panalpina trying to do it before getting acquired, of course. And so we do see a lot of them changing their mindset, but it has to be a complete cultural shift in some of those companies, and I think that's the challenge for them.
Yeah, changing the culture, which kind of leads to my next question I wanted to explore, which is around data. And you talk about legacy systems, legacy API systems, legacy EDI systems, just legacy data systems in general, a lack of connectivity. I've spent 20 years here mapping different data sets together, and everybody has a view that their data is in pretty good shape until you start trying to connect it and you find you've got different unique identifiers around containers and trucks, and some people reuse truck numbers and trailer numbers and container numbers, and there's no version history. So inevitably you get into the situation of how do you actually map data sets into a new platform. So Graham, how have you dealt with, on your side from the connectivity point of view, dealing with all of the legacy data systems?
Yeah, I think, to be honest, Dean, we're quite lucky as a young technology company that we've built, a brand new stack free of legacy, and that's allowed us to build, a bunch of APIs, around 50 APIs, where when our customers go live, they have their own API keys and they can, plug in all sorts of services. But I think, what we see in reality is still quite different. A lot of our big customers are still connecting into our systems via EDIs, and a lot of them go back, some of them go right back to the 1970s. Yeah. And I think that we're definitely moving towards an API world. As Matt said, what shippers are looking for is, great digital experiences like they have in other parts of their business. And I think if you fast forward a couple of years, BCOs will just demand that, and will go to platforms where they can find that. And I think that in itself is a monumental shift because, effectively that will drive APIs, because a lot of the transactions today tend to be received on the ocean freight side, tend to be received by email, and they're keyed into back office systems. But if you look at modern platforms like Kontainers and others, it's moving towards a consumer-esque experience. It's a simple user interface, instant chat features, one-click rebooking. And I think when shippers get used to that system, it moves them almost automatically into an API world, where all of the data information is now held on their customer-facing layers, and it can be interchanged instantly between APIs. So for us, I think, we see this customer-facing layer as quite an important part. And as the industry moves along and moves, towards customer-facing and has less of a dependency on back office, I think you'll see a natural progression from EDI to APIs. And for us, APIs are, incredible in terms of moving information in real time between systems and have API calls. And for us, I think that's the big one we see in the next few years.
Would you say it's a global trend, or is that specific to certain geographies?
I think, to be fair, it's a global trend. Again, I think the big ocean shipping brands are all in on tech, and by default, they're driving APIs. You know, we work with a number of the top 5 carriers, and all of them ocean carriers, and they either have a great set of APIs or they're very close to getting them. And I think that's a central part of their strategies.
Right. Martin, how about you? How are you dealing with the legacy side of the data?
For us, because we're a standalone marketplace, we haven't had a lot of integration issues. What we're trying to do right now is trying to tie into the various fleet management softwares, so that if any of our shippers have to do anything with respect to their rail cars, instead of having to go to our marketplace, they can do it through an API directly into their fleet management software. But what we're finding is we're getting a lot of our shippers to want to take their existing data with their fleets and being able to push it into our marketplace. What they're trying to do is take all of their existing data, push it into our marketplace, and take sort of comparisons or contrasts to what are they seeing in their fleets versus what is the general sort of trend of what's happening in fleets sort of similar to theirs. And that's where I think the unique component of our marketplace is we're the only platform you can go to be able to see real-time trending analytics on what's moving on rail. And 80% of all commodities moves on rail. And it's a complete black box because there's effectively only a few sources of information you can actually get as to what is happening on rail, and it's typically lagging information, so it's not real-time information. So what we're trying to do is trying to sort of create some transparency so that the rail industry itself, not only shippers within their own fleet or within their own portfolio, but across the sort of shipping commodity spectrum, they can see what's happening in real time with respect to sort of movements, where there's supply-demand constraints, where there's higher levels of activity in specific regions or in specific commodity areas, and that is something that shippers traditionally haven't had access to. So the power of what we're doing in combination of shippers actually sort of taking their data and sharing that with us, sort of coupled together, I think is going to be something very robust and powerful for the industry.
Does that apply to that same discussion we had last week about transloading locations and how PSR is sort of driving the need to look for more efficiencies?
That's exactly right. So what railroads are trying to do, and then one of the largest growth areas that they have currently is the transloading part of their business. If you look at the railroads and look at their earnings and where their revenue is increasing, where they're putting more time and effort into, it's transloading facilities. And the goal there is to try to create more nodes on the network. So if you're a major Class 1 railroad and you have an existing network, how do you get to move more product? How do you create more frequency for the units that you're moving? You do that by 2 things. You put more warehouses on your network, so you increase the nodes so that you have more suppliers and manufacturers, producers being able to have product that they can move into warehouses in the network. And number 2, you create more transloading facilities so that as you see shippers that traditionally have been 100% trucking, and because of several constraints or issues, they have to sort of now have some component or capacity of their product management or their modes of transportation be moved over to rail. In order to really do that effectively, you need more transloading sort of sites, whether it be mobile transloading, whether it be actual physical locations, so that you can create more access points for each of these shippers. And then for the railroads, it also provides them more sort of analogous to airports. It creates them more nodes or more nodes in the network so that the products can actually move from one mode of transportation to the other easily and not be sort of confined to only static locations, but now more dynamic sort of transloading can take place with the shift of mobile equipment into areas that traditionally have been either very rural or have been not very sort of highly utilized for these shippers.
Got it. Matt, on your side, you would have seen more of this than most, right?
Yeah, we spend a lot of money on SAP integrations, unfortunately. If SAP would just go away tomorrow, that'd be much easier for us, but it doesn't sound like they're going to do that anytime soon. I think it's worth, just on the back end of what Graham said, you know, when you think about a global trend in terms of integrations, it used to be that if you walked into a large enterprise as a 20-person company and said, hey, I'm going to sell you back office software, they would laugh and send you packing. And then if you subsequently said, we're going to build APIs into your back office so that 100% of your volume goes through us, they would think that you're going to charge them $3 million a year for API integrations and things like that. And so that's because of the legacy of EDI connectivity in the enterprise. And whenever you say EDI to any shipper, they look at you and think, oh no, here it comes, here comes the price tag, right? And that's just not really the case anymore because of the way software development has changed over the past 10 to 15 years. And so large shippers, large enterprises are starting to realize the benefit of being able to increase their own efficiencies while decreasing their switching costs between providers by using these types of technologies. And I think it's also worth mentioning when Graham talks about the large carriers, the carriers want to become more vertically integrated and push out the middlemen because that's how they're going to control their customer and increase stickiness. But they've been completely commoditized for 25, 30 years. And so this is the only way they're going to increase their stickiness with their customer, which is to push the freight forwarders out. So it is fascinating to watch that happen. From a shipper perspective, they think they're all the same anyways, in reality. And so they want to make sure that they can get access to those companies as fast as possible.
When we spoke last week, you made an interesting comment about the middlemen and compensation packages and how things have to change there.
Yeah.
Can you speak a little bit about that? Because that's a fascinating insight.
Well, sure. I mean, if you look at the majority of the intermediaries, their salespeople are comped based on gross profit, which is non-existent and sometimes negative, and volume. And so if you're comped on gross profit and volume and you sell a commodity with very little value-add service that's a real differentiator, then you're not going to want to increase the transparency. You're going to want to decrease the transparency so you can trade better with that customer. Yeah, and the packages will have to completely change. I mean, they'll have to have an Accenture-style consulting model.
Interesting. Yeah. I mean, with all the advancements in technology, let's just speak a little bit about what you see happening. Like, what's the next big thing that'll change your particular market? Graham, what do you see happening in the future?
I think, the ocean freight side, again, where we spend a lot of our time is definitely behind other modes of transport. And I think, for us, the speed and keeping up that speed is very important. And I think, the point about shippers now getting to a stage where they are demanding customer-facing execution capabilities. And now that a couple of digital startups and companies like us on the enabling side have made it apparent that this is possible, I think you'll see, a change in the market over the next 5 years. A lot of the middlemen or freight forwarders, I think there's kind of, it's not as simple as saying there's two sides, but I think there's a group of them that have been very innovative in other parts of their business, and I think they'll use technology to future-proof their business and enable, a bunch of brand new revenue streams. On Matt's point on just adding arbitrage 20% or 10% to freight rates, those days are pretty much gone. But in an API, in a technology-driven world, a forwarder can now, use an API and plug into a JP Morgan trade finance tool or a AXA marine tool, and the customer ticks a box and they've got 2 new revenue streams, and there's literally dozens more. So, I think the ones that are adopting to that are not only going to survive, but they're really going to thrive. And then I think as well, there's a lot of freight brands out there that are still keeping the head down and continuing to survive and think about tomorrow on the arbitrage. And I think if you look at the marketplace in 5 years, it will be very different. There'll be a bunch of shipping companies and freight brands that will thrive. You will probably have a number of digital disruptors that will do quite well and take market share. And then you'll see almost a natural culling as well of freight forwarders that are just not adopting to technology and not realizing that, it's a shipper-led world and they're demanding these services now.
Right. Martin, in your world, it's probably due for a change, right? There seems to be some movement, but way behind.
Yes. We definitely are, unfortunately, still a bit behind trucking, just sort of across not only the operational component, but also the commercial component of rail. But we are catching up, and I don't say sort of primarily for me representing the rail industry, but overall across the rail shippers, you talk the finance companies, the service providers, the railroads. It's clear that senior management is putting a lot more emphasis and time and resources into adapting technology. I know that's a very broad term, but with certain respects of specifically data, how can they take all the data that they've amassed over these decades and decades of years of shipping on rail and take that data and look at that historically and say, let's layer that on top of our current activity and then layer that on top of future projections, and what can we do with that data to help us be able to optimize the way we ship products better? And then number two, I think overall connectivity across the rail industry, because there hasn't been much technology, has been very difficult. So connecting the transloaders with the service providers, with the railroads, with the lessors, that whole sort of spectrum of constituents within the ecosystem need to have more connectivity in order for them to have an information flow that's a lot more effective and efficient for the way they manage operations. And as positive train control, as you have marketplaces such as us, as you have more operational software companies that are tying in other sort of functions and features that allows them to connect into other databases within the rail sector, I think all that connectivity will drive much more informed decision making and then much faster decision making. And what I see also is blockchain. Blockchain will probably have some impact as well. There's a lot of issues with how manifests are move through the supply chain and other sort of components that are error-ridden today and that potentially could be solved by blockchain. I don't see that within the next few years, but I do know that there are many large rail shippers, the railroads and other sort of constituents within the ecosystem that are heavily looking at what to do with blockchain to solve some of these issues.
In fact, one of our first standards in the bidder organisation is around things like digitising documentation and developing standards around things like bill of lading and proof of delivery.
That's right.
So that's a big one. Matt, how about you? What do you see happening in your space?
Well, I think labor costs are rising in just general context is the word global, the phrase global trade it really means labor arbitrage, right? People are cheaper in one part of the world to manufacture a good than they are in another part of the world. And so when you think about it like that, labor costs are rising in areas where labor used to be cheap, right? China, labor used to be cheap, it's not anymore, right? So if labor costs are rising and freight in logistics is your highest variable cost in a supply chain, then what you're going to do as a shipper is do as much as possible to drive down your operational overhead. And so the average Haven shipper ships about $25 million in ocean freight a year. That's our average customer. Almost all of our customers own their own multi-billion-dollar in-house freight forwarders. So the dynamic's a little bit different. And so what they want to do is reduce their dependency on ops headcount, basically, as part of the supply chain and part of the trade. So we start to see a lot of customers trying to bring their logistics practice in-house instead of outsourcing it to third parties, number one. Number two is even their in-house freight forwarders, they want to reduce their dependency on that group, that operating group. And so we're seeing a lot of that pull from the BCO to bring that kind of operational dependency in-house at a low cost.
Right. Graham, in Europe you've got the GDPR, the data privacy issue around individual personal data. Can you give us a quick, in the last couple of minutes here, give us maybe a 30, 40-second overview of Brexit and where we sit with data privacy in your world?
Yeah, I mean, I spend probably half my time in London, half my time on the east coast of the US, and I think the uncertainty that it's created, our development is still in London, and the uncertainty that it's created has just been incredible. The amount of companies, including ours, that have taken decisions to move part of our workforce out of the UK as a result.
So you've already moved people back to Ireland as a result?
Yeah, we've moved just to get certainty and take that uncertainty out. And to be honest, talking to more companies and technology companies in London, the uncertainty just continues to it just dribbles on. There seems to be no end to it.
Right.
And I think the GDPR, it's much more pronounced when you spend more time here in the US, where it doesn't exist. I mean, it's created a lot more compliance issues and a lot more red tape, but a lot of people, a lot of companies are not exactly respecting it as well. So I'm not sure if it's had the impact it has intended to have.
Right. Matt, question without notice. Martin talked about blockchain, but do you have any play in that space, or any sort of future vision as it relates to your world?
Well, it seems like it's taking off a little bit more in the trade finance space,
right.
For clearing and execution of documentation. And so for us, we've done there's been a couple of transactions that have flowed through the platform that have used one of the bank's versions of blockchain. Yeah. I'm actually a bit of an open source nerd, so I prefer the original definition versus what it's become, which is basically a distributed IBM database that everyone's trying to get on. Yeah, I think there is some opportunity in a general ledger that is verified by multiple parties at scale.
Right.
And I think that's about as far as I can get to on it.
All right, That's good.
Otherwise, it seems to be pretty costly.
Right. Well, that brings us to the end of our panel session. I'd like to thank Martin Liu, founder and CEO of Commtrex, Matt Tillman, founder and CEO of Haven, and Graham Parker from Kontainers in London. Please give them a big round of applause. Thank you.
Thank you.